and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Kavita, and you are catching us live from SQR Live Studios and taking a quick look at the markets. We are off today's highest point. It's trading in the red territory as of now. But yes, a lot of action is what we are getting to see on the back of the earnings. And one such counter is Jupiter Lifelines. Hospitals, the company did come out with a steady set with an improvement in the margins as well as revenue. But what's the outlook going ahead, as they are also going some interesting expansions as well? So let's understand all of that with Mr. Ankit Thakker, Joint Managing Director and CEO of the company. Hi Ankit, morning and good to be speaking with you. And firstly, let's talk about the kind of growth that you have seen. Looks like a good set with improvement on all the basic parameters. But what kind of a growth have you witnessed in terms of the occupancy, as well as if you can also share the ARPOB number with us for the quarter gone by?
Thank you for having me. So on the occupancy front, we have seen healthy growth in Indore, which is our newest hospital. As I have said earlier, Indore is still currently in its rapid growth phase. For the next year or two more, you should see steady growth coming out of Indore. Pune is nearing maturity now. The occupancy stands in mid 60% or high 60% range. It can go somewhere in 70 to mid 70s as a mature state. And Thane for the last couple of years has already been at a steady state, mid 70% occupancy. So on that front, it is contributing to generating cash flows, but not further growth because the capacity has plateaued out there. On the ARPOB front, I think in this period, we have reported an ARPOB of 66,000 rupees.
All right. Also, we would like you to elaborate on the capex front. What can we expect in terms of any update or anything additional being pumped in out here?
So we are in the middle of serious capex and growth. We are building 3 new hospitals. The first of the 3 will come up in Dombivli, which is slated to start Q1 of next financial year. We don't expect any negative surprises there, and we believe we should be on track. That is a 500 crore project. The second one, which we are building, is in Pune. The Pune hospital excavation is now completed and we have begun construction, and we are projecting a calendar year 28 operational kickoff. And the third hospital, again, we come back to MMR. We are building one in Mira Road region, which will start sometime in 29. It's currently on the architectural drawing board and will go into regulatory approval shortly.
But Ankit, also give us a sense that in the next 1 year, say that when some of your newer facilities will come on board, what sort of a contribution will you be expecting in the initial years? Give us some sense over there that you must be having your past experiences, how the overall stretch has been in terms of the initial performance and how the facility builds on and improve the financial metrics.
So typically, first 3 years of operation we see as a settling down phase where you establish roots in the community. Year 1, typically we expect to be EBITDA negative, break even by year 2 and turn positive by year 3. And then the next 3 years, which is now Indore's growth phase, 4, 5, 6 are rapid growth years. So typically that is how we have seen most of the hospitals behave. Which means that when Dombivli starts next year, it should have a little bit of a drag for 1 year before it starts contributing from the following year onwards.
One last question to you, Ankit, and we just wanted to know any guidance for the top line and bottom line coming up ahead.
So as far as I'm concerned, I like to keep guidance limited to new projects and new capacity expansion, and not specifically on numbers, because within healthcare, you are more into serving what comes your way. So on the guidance front, I think the most important guidance that I have now is that Dombivli is coming up strong. We have started team building there, and we should begin operations on schedule, which should give rise to positive growth going forward.
Since the capex is still on and 3 new facilities will be coming on board, any additional requirement with respect to funding?
So these 3 hospitals, we should be able to finish with our own funds and the internal accruals that we'll generate over the next 3-4 years. If we do pick up one more project, that would be our 7th, we will need some debt to fund that 7th project. Currently, we don't have anything to announce in terms of the 7th, but as and when something does materialize, I'll be very happy to talk about it.
All right, Ankit, with this, we let you go on that. Thank you so much for taking the time out and speaking with us and giving us a visibility with respect to the earnings outlook ahead. Always a pleasure.